Welcome back to this live session. Welcome back to the live session for another session on Wednesday. Very much important trading day as well. You can see that there was a back-to-back two dojis. The market, from the level we left it, the price had initial breakdown again, and it's potentially preparing for another move back to the upside. We have seen there was a breakup structure on gold, which is showing that there could be significant move in this market. Looking at here for this session to enter any potential entry, I hope that the stream has started showing up well. And so yes, if you can hear me. Welcome to this live session here for another one, that after the previous one, that the market in this area back-to-back two significant move that we can see. One is here, the other one is here, and from the 4-hour chart we are looking at here, there is a liquidity sweep in that area. There's one here, liquidity sweep. There's another one here, also liquidity sweep. Back-to-back two very important price action pattern that we have seen on gold, and in both situations the market has made a significant bullish impulse back to the upside in that area. So this is a bullish market, and you can see the market is maintaining this uptrending market structure here. Welcome. Now in this uptrending market, if you guys look at, we have turned out the indicator that we see the two important liquidity grab from this support level, and the market also tested the same level here. The price action pattern that we can see, it's significantly bullish after this, the first breakdown here that we have seen past week, and with the two breakdown here, if you look at this breakdown, is quite important from the 4-hour perspective, and the market again reversed back in the major direction of the trend. So we always look at the market that is trending, and that's our primary focus in trading, is to trade with the trend and then taking the trade as we are expecting. You guys have seen the past session how the market reacted in that area, and we have secured the trade as soon as it appeared. Now, where we can look for the next entry? Now we are looking into this market to see a trade that is going in the direction of the trend. As there's only one thing very importantly that you need to keep in note, is that this market is creating an all-time high. So if you look at here, you can see that this is an all-time high. So when the market trades on an all-time high, you'll see that more often it requires more liquidity for creating a new higher high. So what do I mean by this? If you look at this all-time high at 4218 level, as the market is creating an all-time high and moving in the major direction of the trend, so we could see that it requires significant liquidity over time. Is because of the reason why, as whenever the market creates a new all-time high, the bulls hesitate to buy again, and there is a rejection coming. So recent high that we have seen, the price has reached 34218 level, which is now from the current price to nearly to 150 pip, and this is the move that you could see now currently the price to potentially return again back up. So going back to the very lower time frame here, we can see there was again there was another break of structure previous session that we have seen, which has given a benchmark here. If you look at, this is the benchmark, and this breakdown was a retest of this order block here. Now the previous session's trade, looking at here, the market has exactly out of that level. Now looking at the 5-minute chart, and then we will be looking at the multiple time frame analysis here in that market. So replaying the chart will always give you a very clear understanding of how the market was moving. Now this is 5-minute chart, and this is the trend line here. So looking at this trend line, how the market started to move from that level. This is a trend line that you can see, support here, support here, support here, support here, and from that support level, if we look at, the market has made its move, drop back to that support, made it move, drop back to the support. So it was respecting this trend line, and it is, as we discussed in our previous session as well, when we see that the market is trending, it's gonna follow a pattern, right? It's gonna create a series of higher high and higher low, which is respecting a trend line. And when this bullish move happen in this market with this bullish structure, so if you look at here, you can see this is a bullish structure where there is a triangular pattern formation here in that area. So this is a move with a triangle formation, which is a bullish triangle that you can see in this market. And in that bullish triangular pattern, if we look at, this is a clean uptrending market structure where the price possibly to return again in the direction of the trend. And this is a recent high, which is also an all-time high that we have seen. And exactly in that level that we place our entry from that zone with only few pip. If you remember, 27 to 28 pip to 30 pip. Stop loss. That's the smallest area that we could see. Now looking at the 1 minute chart, the entry was 1 minute, right? Here. This is where the entry candlestick pattern form for us to give that move back to the upside. How did the market reacted to that level it has created? And also, what are the most important factors that you have looked at when you open that position here? Now, trading is just looking at the pattern that I have discussed quite a few times in the past, guys. Is that wait for the market to show up that pattern. So if you look at, this is a bull flag, right? And in that bull flag, so if you look at, this is a bull flag, and in that bull flag we saw that there was a multiple rejection from this price here that we have seen in this area. So what was our entry candle? Right. So if you look at here, you can see there was a breakup structure from a pattern, followed by we saw there is another structure formation in that area, the second entry that we have opened. So looking at the second entry, once the market managed to break to the upside, it has created the second structure that we have open position here in that area. Now let's see that why that trade was so smaller zone here that we have entered, and straight away it shot up to the back to the upside here, right? So if you look at in this area, that you can see there is an inverted head and shoulder, and with that inverted head and shoulder, the market has completely broken back to the upside. This is a complete inverted head and shoulder breakout from that inverted head and shoulder. Okay, so with that inverted head and shoulder, the market created a move back to the upside here. So if we look at that zone here, this is a structure formation here on gold, and there is a breakup support. The market has dropped and then immediately rejected back to the upside, and then sideways movement that we have seen in this area. That's the zone that we looked at for the entry, because already we have seen the market has shown that it's a bull market, and in that bullish market the price has broken that support level, and with that break of this support, the market in fact rejected back to the upside with one single impulse without any pullback, and the market rejected back above from that zone with a full impulse back to the upside, maintaining series of higher high and higher low. And from that level, if you look at that, it started to move in the direction. That's where as a trader we need to look at the entry from a key level, right? So this is what was our entry trigger. If you look at this candlestick pattern here, you can see this is the entry candle. This is what you need to look at with this entry candle. And the same trade also, if you look at, I have shared the same entry and stop loss and take profit target in the group where other members are trading. So exactly the same trade. If you look at 4199.90, we bought it here. Stop loss at 4196.48. Very, very smaller stop loss. TP target at 4204.45. Now, stop loss is very narrow. That's how I trade. And straight away, the market has bounced off that level. And in one trade, we have taken that, we secured that profit. If you look at, also exactly everything is being shared here. Not only that, we have another trade that I have opened as well. So we entered this trade here, 4200.24, and profit taken at 4204.00, which is 691, and the previous one 4198.75, profit taken at 4205.80. And that trade, so if you look at nearly to 70 pip on this, and the next one in this trade nearly to 40 pip. So one trade, you need only one trade and move back with that trade. So the key here is to look for proper entry area, the candlestick pattern that can give you a bigger move. Now, if you look at the stop loss that was placed, was very, very tight. The first trade entered at 4198.75 and the stop loss at 4197.32. Right. How many pips stop loss, guys? Can you see that? It's nearly to 10 pip to 12 pip to 13 pips stop loss on this trade. And it really matters, because when you have such a smaller stop loss and the market move in that direction, that's what we need as a trader, is to look for a trade that has a very tight stop loss and I'll give you bigger profit target. And you can see that didn't look back, straight away drop and bounce off that, smash that profit target hit. Now the second trade, the stop loss, if you look at, also a very tight stop loss and a straight bounce off that level. Now you can see the market is again creating a structure where I'm looking at further entry opportunity. If you look at the 1 hour chart, that has currently showing up a structure formation. This is the 1 hour price action where there is a bullish 1 hour candlestick pattern. 4 hour chart, from this support level, the market is breaking to the upside here in that area. If you look at the 1 hour chart, again, this is the current support level, and from that area, looking at another entry opportunity here in that market. Look at this one, guys, 30 minutes chart. This is a bullish pin bar, straight rejection from this key support level, crossing the previous candle's low, forming a bullish candlestick pattern with a doji here, and expecting the market to test again, reject back again to the upside, to the major direction of the trend. Quite a few 15 minutes candle. Are you guys ready for an entry? Do we have any high impact news coming today? I don't think so. Welcome. Do you see any bearish movement on gold tonight? 4 hour 20 retest. I don't see any potential bullish bearish movement, but anything can happen. There might be stronger liquidity trigger, but we can see that on the lower time frame price action, this is currently a bull market, and the market structure here showing up for a potential another bullish entry possibility to come up very soon. So that being said, we are looking at here for another entry to the upside on this time frame. If you look at the 15 minutes candlestick pattern, you can see that this is doji here, and 30 minutes back to back, two important. This is shooting star, right, or hanging man. Now that hanging man is, in fact, it's hanging in a right place, so we need to look for a possible entry respecting that, potentially that hanging man, and then bouncing off the new resistance line. And this is what we are looking at. If you look at the 15 minutes, you can see the market from this support level with a bigger bullish candle followed by a pullback, and the market is maintaining this series of higher high and higher low, which is in an uptrending market structure. Here is a longer rejection that you can see. This is a very unusual breakdown, which is a pure liquidity grab. Now, if you are not sure about the liquidity grab, we will be discussing in this live session. Don't miss out any part of this live session. We do discuss some rare stuff here, guys. This is the main goal here, is to give you the right education, because trading education is not available at all. You won't find the right trading education. How do you understand when the market is breaking down or it's reversal, right? How do you identify a move is a false move or a right move? Where do you get that information? Make sure you stick till then. You'll see that how we can identify a move is a false move or real move. This is a very important criteria to enter any trade. Can anybody have an idea? How do you identify a move is a false move or a real move? Right? So this is where, because when it is a false move, that's where the entry, that's where the higher probability trade setup comes in play. Have an idea what is a false move or a real move? So this is what they make a big difference between a trader who understands the market and a trader who doesn't. You can see here it's coming now for a pullback. So the entry for this currently after the previous one, I'm looking at in that area where there is a an important support that the market could retest and then reject back again to the upside here in that market. We see some rejection, which is potentially correction, and expecting the market to test and then return again back above. Here is a, if you look at, this is a bigger move, expecting pullback and then to return again back in that area. So if you look at the lower time frame here, what do you see? That the market to test, reject again. I'm ready for a potential entry here. If the market successfully bounce off that level, we can expect 180 pip, at least one more back to the upside if we can rightly enter from a key level. This is the 30 minutes price action. We see that the weak fill here, this is current level where there is a 20 EMA and also the 4-hour support level here in that market. So looking at lower time frame price action for another potential weak fill in that area. We'll be looking to see that for this potential break below, and 15 minutes candlestick closing in, this is 1 minute remaining for this candle to close, is carrying rejection from the higher price. So if this candle dropping down here with a bigger red candle close, we might see the next one coming further below before it bounce off that again, and that's what you want to enter the next trade from this. This is a bearish fair value gap. If you look at in that area, you can see it's a bearish fair value gap, looking at to enter in that bearish fair value gap to the upside, and that's what we will be aiming for this session, for the market to cross that zone and then take us to the trade to the key resistance line. Now until that, we will be waiting to see further downside in that area. Now this is an imbalance in the market, and I love to trade imbalance, that you guys have seen that sometimes the market straight bounce off without any stoppage. Why? Because imbalance in the market, and imbalance is key to trade, as the market doesn't like to leave an imbalance. That's why you'll see the market moves from imbalance to the imbalance, right? So it's like an universe. The universe doesn't like to the universe constantly strive for balance. This is what the job of the universe is, to attain balance, restore balance. And that is why you'll see that anything that holds excessive importance, difficult to achieve. You can apply in very different areas of life. You'll see that the people who has a very stronger emotion attached to something is very difficult to attain. Even it comes down to the relationship. You will see that the people who has a very stronger emotion to certain relationship, they ruin that relationship because of that stronger emotion. It's not only relationship, every aspect. That's why getting rich or attaining money is so difficult for some people, is because this area has a very stronger emotion that hold, and that's why it's difficult to attain. That's why it is so important that you always remain as neutral as possible, so that you can keep, because anything has a very stronger emotion. That means excessive importance being attributed, the universe will come to put that things out of balance, to restore the balance of the universe. And if you want to really go with the flow without disturbing the balance, but going with the direction that you want to go, then the best way is to always look at staying neutral as possible, as to go with the direction. So the market does the same thing. If you look at it, left this imbalance here, right? So this is an imbalance in the market. So what we could see that the price to, if the market reverse back here, it, as soon as the market will manage to break that high, the possibility to cross that fair value gap, this bearish fair value gap on the 15-minute chart, to fill and then continue to rise back to the upside here in that area. So that is where we are looking at in this market, to cross that high and then potentially to create a new higher high in this market. All right, so ready for an entry. We'll be looking to see that where the market is reacting at what level, so that we can get into that entry for this potential bounce of that level. Now we could see that the market to possibly to drop further to fill that zone, because this is a long-term bull market. We could see the market to potentially to reject back again in that area. This is where there is a high liquidity, and now breaking up from here is where we would like to see the market to potentially return to the resistance line where there is a high area of value. Now above this level is nearly to 120 to 130 pip could be an upside move once the market managed to bounce off that level. Before that, we could see the price to come back here to retest, possibly to fill that zone, and then to revert again back up in that area. For our chart, that you can see the market is coming to that intraday support level, and with that 15 minutes candle close, the market is slowly building that momentum back below. Now the question is, a very important question might come in play is, okay, if this is bearish candle, why we are not selling this market, right? We discuss that with this bear candle, the market may possibly to drop back to this support level. Now, why we haven't sold this candle, though we more often enter the trade in this kind of price action, but why we didn't enter here? It's a very simple understanding. So you see 30 minutes price action, it's slowly creating that bearish move in that area. Do you think ICT is right concept, and how does that work? I'll have a separate lesson on ICT. There is a lot of content also I have posted in the past also. So along with combining with the SMC and ICT, also there is a separate lesson on the channel. If you guys have missed that, you can head on to the channel. There's a playlist where you can find all the information how to use ICT and SMC. Now ICT with the daily price action, which is the most effective way to trade, especially if you look at the daily price here, you can see the market already, once the market open, it creates a move. So ICT mainly deals with day-to-day session, with what session you are trading and looking at those sessions, while SMC uses the overall volume of the order block, and in relation to the order block where the market is, either it's today's, tomorrow or yesterday, depending on what you are looking at. When you are looking at the ICT, you are looking at the individual day and the sessions where the market, how the market is doing, and you can combine both of them. If you want to combine, that's gonna be much more powerful. This is what I use along with the SMC. Once you combine with the ICT, you started to see a different picture, because if you use the daily low, sessions low, okay, sessions volume, and then combine with the SMC where the order block is. So if you see the daily low in an uptrend is touching the order block, that is, you are combining with the SMC and ICT together to make a new movement in the market. That's where you can find the highest volume. So what do I mean by this? Imagine that you open a position where the market open in Asian session, the price has moved 500p or 200p or 300p, and then the market returned back to the sessions, the Asian sessions low. That means it just has broken the daily low in an uptrend. After going the 200 pip, it returned back below 200 pip. So you are looking at ICT. Now when the market breaking that daily low, also you see that it just tested the order block, which is the SMC concept. So you're taking both directional volume. Keep in mind, guys, the market is what is? The market is bunch of belief. So the more concept you will be including in your strategy and trading decision, the more belief you can hold in your trading. So what does it mean to be the market is a bunch of belief? Is the more people, if the market, more people believe the market will go up, the market will go up, because we take the trades based on how we believe, right? So this is what you need to look at. And if more people think that the market will go up, more people will place buy order and the market will go up. So it's a bunch of belief. So the more confluence you will take, the more people's belief you are including in you're staying in the edge of more people, which way they are trading, right? And that's how you can stay in the edge of your trade all the time. There are more content will be shortly after. So there's a lot of content you guys can see on the channel. So don't forget to subscribe to the channel. There's a lot of education that can change the way you look at the market. So that being said, here is currently we can see the 15 minutes close coming, which is potentially creating a doji here. And I would like to place very soon an order here for a possible upside move in this market while there is a break of structure. If you look at here, you can see this is a trend line here, and the possibility for this market to break that high is higher. So it's a pin bar that being formed on the 15-minute chart. So you see there is a 1 hour candle close coming as well. And in that 1 hour candle close, so you can see the market slowly forming a pin bar on the 15 minutes. So we can look for a potential entry either from a pending order for this break of this high. With the 4 hour also you can see the market to potentially test that high. There could be a range here. As you can see, it's a trend line. Or you could see the market to straight bounce off that level. Okay, so there is an inverted head and shoulder on the 1 minute chart if you look at, and that's a potential move in this market. This is a important support, which is the market on this trend line, and break of this trend line is where a possible entry. We might see that the market to return from that to the upside here, but breaking from the trend line, this is a void here. So this is what I'm looking at in this session for a break of this low to give us a potential entry here in this market. Getting the rejection here, I would like to see that the market to manage to break that low and then to revert again back to the upside here. Okay, slowly we can see the market after this 1 hour candle close. This has formed a doji in that area, and here is the support level. The market is showing up from that zone to bounce off that area. This is a doji that you guys can see, and the possibility for an upside bounce here is higher. So if you look at here, you can see from the support level, expecting the market to test and then to return again back above here. So this could be the wave on this market for break above. So from the 1 minute, we can see that the inverted head and shoulder and break of that support, there is rejection back to the upside here. This is the current support level on the lower time frame that the market has tested and could potentially be a bounce here on the lower time frame that we could see on this market. This is the current support level. We can see there is a little range here in that market, and that range, that's we're looking to see the price to break that low and then to revert again back above here in that market. The price is approaching that high. Now with the bounce here, the market slowly moving up to the direction of this trend here, and that is the zone that we are looking at in this market. From this inverted head and shoulder to fill that zone, we saw the breakout again with this support level, and that is the zone we are looking to see now to break below and then to revert again back to the direction of the trend. So always we look for a zone where there is a breakup structure. Breakup structure is where the market gain momentum again. So if you look at, this is the support, right, which is a clean support that the price respected in the past. We saw the break from that support and then rejection with an inverted head and shoulder. So current drop, that this is 1 hour price action. What we are looking at now here, you see here series of lower high from the 1 hour, which is a resistance, expecting this market to potentially come down further below, and then to drop down here and then to bounce off that level. The trend is up, so you will be looking into that entry opportunity to the upside here. In this current movement, that if we see the price is coming to this support, to this 1 hour level, we will be straight going back up in this market. So our plan here for a bullish entry to this support level. Good afternoon, welcome. I think there is a chance to we go to 4176 to fill 50% weak fill. 4176. If you look at the 4 hour, now 4176, if this market drops, let me tell you what we could see here. Now if the market, which is most likely to bounce off that level, also because there is this is a slender candle, let's delete those lines here. Now you can see the clearly 4 hour chart, right? And this market could drop down here, and if it drops, most likely you see the price to come back to 41 nearly to 50 level, not 41 potentially to 76, because anything, we don't know exactly how much the price will move. The only thing that we know is how the market is reacting to certain level, right? That's how we can enter into a trade. But if the market drops here, if this doji is being tested, the lower shadow, very highly likely you'll see the market straight breaking that low, which could lead this market back just above this doji or touch that narrower red candle here in that area. Okay, so that's gonna be a potential move here in that market to bounce off that level. If you look at this narrower red candle, is a high liquidity zone, and chances that if this support is broken, it could come back here to retest and then to return again. So that's one very high probability to happen. The other probability is respecting the current 4-hour support, which is what we can see at the moment, this level, and bounce off that to create a new higher high. The only thing here is that this long wick for this 4-hour is too long. So when you see the market create such a too long candle like this one, it find it difficult to break that high. So the market easily break this kind of wick. So if you look at a green candle and then little longer wick, smaller shorter wick, that kind of candle easily bounce to the upside, not too long. So if you look at like that, okay, this kind of candle, you see the price will go halfway and then drop down for rejection from the higher to the lower. So if you look at today's daily candle, you can see the same pattern here. See the daily candle here. So the previous daily candle, lower shadow at the bottom, little higher shadow, not too long, and the market, you see that once open, straight bounce off that level. So the way this market has moved, the potential for the price to break below daily low is very low. But at the same time, if you look at the 4-hour chart, that is where you could see the market to nearly to touch that daily level and then to return from the daily level. So if the price drop, then we could see the price potentially to retest this trend line in that direction, possibly touch the daily low, maintaining this series of higher low, bounce off that level. There's one possibility. So you can see it's trying to break that low here. So because it's a long-term bullish market structure, at the moment, still we are not looking for selling unless we see a clean change of trend on the lower time frame that we are talking about the market to drop. Now, here is the order block. This is what I was talking about, that ICT and SMC. So if you combine that here, you can see that this is the order block in this move here, which is the daily zone that we are talking about. This is the daily support level. And today's market open so far maintain this with this double bottom, creating series of higher high and higher low, and we saw multiple liquidity sweep along the way, and the price has bounced off that level, followed by one strong breakdown, and we might say accompanied by another one like that, then to return again if that's the scenario in the market, which is possibility to play out as well. And if we see the market has broken that trend line, this support on the lower time frame, then we will be looking into potential sell opportunity here. Why not? If we see such a big drop, as there is a massive imbalance, that's massive fair value gap, if the market drops straight, we could see that coming back here. So this is what we would like to, currently in a range that you can see, it's a very narrow range, and until we see the market manage to break that range, we are on watch. Patience is key. If you look at, right, so the market is patience, targeting 4-hour 20 EMA, as I said earlier, 4150. For our 20 EMA. For our 20 EMA could be well below here, and so if the EMA goes up little bit higher, for our 20 EMA, it might move around that 4125 to 4130 level when the market drop. We'll see that how the market reacting in that area. At the moment, in this lower time frame, we can see it's showing up that there might be some bearish move here on the locally. This 15 minutes candlestick pattern also form a rejection from the higher price here. So looking in that area for the market to drop down. And you can see that breaking that low, breaking that trend line here. Welcome back to this live session. So just look at the support level here. So 4 hour chart that you can see the price at that 4 hour support level. Now from here, either to drop or reject. So the more long-term trend is bullish, so you always look at the bullish move. But in case the market is dropping down, that's gonna be for us to look at where it is coming. As we discussed, it could come back here. If it breaks that low, that means the previous session's low, coming to 4163 or below is a very important zone that we will be looking for buying opportunity, because already there is a long wick. Now if you look at this bearish candle, you can see it's a big drop, and extending below that candlestick pattern is an important zone for us to look for entry. So you see there is a breakup structure as we discussed, and I'm waiting to see what happened. Coming down below is a hot cake, so you'll be looking for that bigger move back to the upside here. The market structure here is what we are looking at. You guys see that it's coming. This long wick, you can see it's also imbalanced. There is no any green candle has tested that, so we could see straight coming down back below. If it comes, I'm not selling here because it's a long-term bull market. You're not gonna enter against the trend trade, which is another very important lesson. No matter how fast the market move at the moment, is the best idea is to wait for the price to break this key level, potentially come back here to this order block, and then look for buying. Because at any point you could see the market is reversing back again. So you cannot certainly tell exactly what level it's gonna come and go until you see that the market has come back to the now. In this session, in the beginning of the session, we discussed about one very important topic, is that how do you know a move is a fake move, right? So you see that the move happens in the direction of the trend and also against the trend, but how can you identify that a move happening is a false breakout or breakdown? The first thing is that you'll never know that, right? You'll never be able to tell exactly which one is a real move or fake move. But there is a way that you can increase your probability incredibly high, and that is where our entry opportunity. So if you look at any move that is against the trend, firstly, and without proper pullback, secondly, bigger ATR, hitting key level of support or resistance, that is potentially a fake move, right? So this information will give you clear, and that's the best way to enter. That's where the smart money trade, because these are manipulation in the market. So no, not going to sell here. The reason you can see that this move that you can see currently, these are the move that anytime you could see a rejection. It could come back here, as you mentioned. You could say anytime a rejection back. But when it prepare for bounce, that is where you could look for that entry. Now, catching the bigger move is very important to look at. If you looked at our previous trade that we have opened, so two trade, one was in a system, one in this live session that I've shared that on the premium group. We have secured the trade. So this one closed in, if you guys look at the stop loss peep here, how many people stop loss that has? This one entered at 4198.75. Stop loss at 4197.32. In gold, how small the stop loss can be. And a straight bounce off that to the profit target. It's not all about also this, the lot size. It's also about the stop loss peep. How many peep stop loss you put on each trade. Keeping a smaller stop loss from the right entry is the key, because the more you will keep trading with proper risk management and taking the bigger trade, that's where you increase your chances of remaining profitable over the long term. That's where you can see the market has maintained that downtrend. The price has dropped down here. Now it's on this support. This long week is, as we mentioned earlier, it's an imbalance in the market and waiting for the price to fill that zone. We see this break below, and that breakdown here, any break below this level is a good opportunity to look for buying opportunity here. So as the market managed to break low from this high, the possibility for the price to come back here, and this is bullish fair value gap. Okay, so if you look at, here is the FVG, and then this is where the liquidity is on, the smaller red candle. This small red candle is where resistance turns support, and would like to see the market to return again back above here in that market. And there is an order block. Now lower time frame price action is still here bearish. So until we see that this bearish trend is continuing, we will be looking to see how far it is continuing. Crossing that low, becoming overextended from that zone is crucially important to look for any entry, because one very important candlestick pattern that you can see, this 1 hour candle, see the ATR of this 1 hour price action, which is more than 2.5 ATR. And also there is a long wick, so that's a rejection, that's a buying pressure. X, that means that level is a very high demand area. And once the market overextend back below, there's another liquidity zone here, is where big buying pressure coming again potentially. You're going to see a potential break below here in that market, where bearish price action that's showing up, and okay, so you might be able to find short-term selling opportunity, but would like to see that before this 5 minutes candle close, as if this 5 minutes candle closing as a narrower green candle, which could be a very important price action that you can look for possible entry here. And Okay, so there is a bearish price action is being formed in that area. So looking at its, if you look at, this is the 5-minute candle, which is potentially forming a doji. So we will be opening sell from this level, stop loss above this side. This is short-term sell. As we mentioned that we only will be opening when we see that very high probability with proper stop loss and with risk management, looking at for this potential drop down here to this support level, keeping stop loss above this high. It's a market entry, so definitely it is important that you guys put the stop loss, which is very important to look at. I'm looking at here in this market for a sell to this trade to take this move back below. So open sell, start to move back below, and this is a quick trade. We will not take so long because we'd like to see that take that move back below, potentially to come back down to create a new lower low, and there is an imbalance, so expecting to drop down here. We already 44 pip move, 50 pip move, and I'm taking the profit right now. It's a quick scalping trade. I've taken as soon as I open. My trade is closed here. As I mentioned earlier, it could still continue to drop or could bounce back up, but I'm out with the trade. It might show up some more drop here for, or we could see deeper liquidity sweep, but you can see there is some movement. The market is showing up. It is still could continue to drop. I'm out with this trade. The possibility that the market potentially to come back here. As soon as I open, it moved to nearly to 44 pip. So a very fast move. This is still possibility for continuation back below. Now the market is still in a downtrend. It still can continue to drop. So you can see it's forming that doji here in that area, and the market structure is showing up to be bearish still. 5-minute candlestick pattern forming a doji, and this is a long wick doji here in that market, and that is where you're looking to see that bearish engulfer filling that zone, and you can see it's coming back down. So if you still on the trade, I would say that we could still see that move, but depending on how I have taken very fast move, and we can look for again further entry as soon as you see the market has shown up. This is it left a very long wick here, and the possibility the market will come back to fill that long wick is higher, and we might see even coming back to that support here in that area. So this is a against the trend trade. So when I trade against the trend, this is where that I always look at for the market to give me the fast move, because when you are trading against the trend, anytime you could see the market just rejected back again to the major direction of the trend. So always against the trend trade is a faster move is what we look at when you're looking at the against the trend. This is where the lower time frame price action, this is another 5 minutes candle closed, which is potentially forming a long wick doji here, and we are out with the trade, so I'm taking that off. Here we will be looking for the re-entry. So if you look at from this support that it has bounced off that zone, and we can see the price, it's a very fast move, guys. I hope that you can see the market on that resistance line. It's trying to break again below. Now if it is a reversal pattern here in this area, we could see the market to again reject back again. So what's your thought on that? Do you think that it's gonna reverse, or you could see the market to bounce off that level? And more often I discuss that. So when we open position and take the trade fastest way possible, especially when we look at the market, when you look at the trade against the trend. Now this is a doji that has formed, which is showing up to be here's the move that you can see. So the trade just we have opened. I would like to bring that this is a very fast move. So we have secured that trade, and this is my profit with this trade. Guys, can you let me know that if you guys see that the pricing and everything, what level that I sold exactly at 4182.29, and I closed it at 4179.89. This is a very fast move. If you guys are with me, say yes in the live chat, you did that too. And when the market moves with a stronger, it's a very fast move that happens, the price creates momentum. So you can see it's now potentially to return again to the upside. If we see the market has reversed that, we will be looking into that. That's what we're looking at. Everything is live. Everything is live. Welcome. So it was when we open quick scalping move, guys, you need to make sure that you do the risk management, which is very important that you look at. And now what we have seen from here, rejection from this level, right? So that rejection could continue to rise. We could see the market is moving potentially back above here for another bounce back to the upside. Now we have more price, more trade to enter, right? So you'll be looking for the next one. This is if you look at here, you see the prediction was here that the market to have a rejection back below, right? So you see that how fast the market has moved in that direction, which is more often you see this kind of movement, the price before it create a false breakout or back down, it happens, it creates this kind of movement. And that's why I use a very small or very tight stop loss for entry when we are looking at the fast move in the market. Now if we look at the 4-hour chart, that you can see now in this intraday perspective, from this 4-hour level, the market has, if you look at getting the rejection again from the 4-hour chart as well, from this support level, we see that rejection back above, and from this support level expecting it to bounce off that level. Daily chart, the market is here. If you look at the daily, you can see this is a daily market structure from this support level, got the rejection back above. From the 4-hour chart as well, you can see it's getting the rejection back above. From the 1-hour time frame, the price action is showing up to be potentially bullish here, and depending on how far it might be coming now will determine that how the market structure will show up here in that area. So we might see that further continuation back below, even creating a new lower low, or we could see that continuation back above again, depending on what kind of market structure it is creating. We'll be able to enter again as soon as we find that. Are you guys ready for another entry? I'm still looking for another entry. There's still probably the market is moving, which is a great way to trade the market when the market moves. And especially when the market moves, when the market has a volume. And I would like to see how many members ready for another entry. So I would like to say yes, if I see that many members willing to enter again, we can look for another entry just to see that how many of you are really paying attention when you are trading, which is very important, because the goal here is to learn how to trade and to see that. Okay, so anyone else? I'm still looking 4160, 4150 level to be reached. Okay, anyone else would like to enter? So yes in the live chat. The market structure here is again showing to be potentially downside. Yes. Okay, well done. Okay, and cooking, yes. Welcome. All right, so if you look at here, the market structure, this is the 15 minutes candle closing. It is still showing to be bearish. Greeting boss, welcome. Welcome. Now, the market structure here is still showing to be bearish. So you see that after break of this high, the possibility, because it left, if you look at this long week, the market more often doesn't leave this kind of long week without retest. So here now possibility to drop again is higher. The market normally moves like this without, when you see that it drops and then it moves up with a very smaller wick, healthy body. That is the candlestick pattern that creates a bigger move. But leaving a long wick is a sign that the price could come back again, because it's an imbalance in the market, which is fair value gap, right? Which is a very important zone that the market to come back again to retest. So you see smaller candle is being created. Those price action is sign of bearish. Looking at the 15 minutes chart, if we look at, this is the 15 minutes price action where the resistance line and the possibility for the market to test, return again back below is higher. Bearish price action here in that area. Welcome. Yep, we're looking to see. Current resistance is here. Now, to sell for us to see another bearish price action being formed, and So you see a bearish price action has formed, a red candle has closed, and looking to see that the market to test that neckline here. This is where we might see some short-term move back to the upside, and getting direction back above here in that area, which is crossing that high as we discussed. This is from the support level, getting the rejection back above. We might see the market to test again we see there is a from here a break back above to this key level. Now we might see an overextension back to the upside, and then the price to possibility to reverse again to the major direction of the trend, or you could see the downside. Until you see that clear directional reverse, we are looking to watch here. Now the 15 minutes price action showing up that there is a possibility for a break above, and later you could see that rejection again back down to that area. This is a high here, and just we saw that overextension above from that level. Okay, so it here a pin bar has closed here on the lower time frame, so which is that bring potentially the market to come to the liquidity zone. So this is the 5 minutes price action, back to back to this green candle. If this one is liquidity grab from this, we might see straight coming back down. Now if this candle drop back below here, we could see the price to coming back here. If this market not dropping back below, we could see continuation up. So depending on how now the next candle on the 5 minutes is closing is important. It has shown that bullish bias here in that area, but at the same time we'll be waiting to see this 5 minutes candle close the next one. Either it's reversing with a double bottom or W formation, going back up or coming down again. Both possibility, both probability exist here. Because this is a very important key level. This 5 minutes, one single candle bounce back to the upside. And that market is breaking down, then we could see the downside here. There's another 1 hour candle form and 4 hour again to see that it's still maintaining a doji in that area. So moving up here, $4160 is achieving tonight. 4160. Okay, it may continue to reverse from here, either to go back to the again daily high. So it will entirely depend on how the market structure is being built. So if you look at here, you can see it's a series of high and low. And from this support level got the rejection back above. If it breaks below from here, that's where you will be looking for sell entry. So far here this is a local bullish bias in that area. Depending on where, if you look at here, you can see this is a 5 minutes candle with a long wick rejection. Now it can continue to break that low potentially. 30 minutes candle closed, 15 minutes also closed. Okay, that's it. Showing up to be downside here in that market. So looking at this, if you look at the 5 minutes here, which is from this 20 EMA, the market started to break. The possibility to return back below is higher. Now we see this potentially forming head and shoulder. So we're going to prepare for an entry. So I'm going to prepare for an entry from that level here. So this is currently on a potential bearish price action. We'll be looking to target to that level for a potential drop back below in this market. Stop loss above this high, TP target below this level. Showing up to be further bearish, potentially. Downside again. So from the time I have opened the position, it start to drop down. You guys with me? Say yes. Now would like to see that breaking back below. This market has an imbalance in that direction. So okay, I'm running in profit at the moment. Are you with me? There's a doji here on the lower time frame, and this is trying to fill that zone. I'm on it and carrying some rejection here, which is what I'm looking to see that this market to show up. We're going to see bullish move here. Looking at the 5 minutes price action, which is getting a stronger reaction back here, coming back below our entry. Okay, so you see the straight rejection back below and entered into the zone again. Might range little bit here, 15 minutes and especially the 5 minutes from this high here, expecting it to break below to the support level here and coming down here to give us breaking that support. Could be a complete drop down to that support here, and this is what I'm looking at, guys. This is what I'm looking at in that market for the price to potentially down back below. Now there is a up and down here. There's a few consolidation pattern is being formed now, depending on which direction the market is trying to be heading in that area here. So if you look at that 15 minutes price action, the 5 minutes doji is quite important to see that it's closing here as a red doji or a very narrow body, could bring that price back. But if it is closing as a bullish candle, that's gonna be possibility to some another move back again. So far in that area, waiting for this trend line to break. It is a very tight stop loss. If the market not going in my favor, I'm going to exit fastest way possible with the minimum minus here. Now there's a 5 minutes candle close coming to see that I'd like to see this 5 minutes candle closing as a doji formation here, and okay, all right, so that's a series of lower high here. 5 minutes closed with a doji. potential breakout, and possibility to trend continuation back up here. So we are out with the trade, and that's gonna continue to trend. So we might see the market not breaking below, so you could see the continuation back above. So the first trade worked, second trade didn't work out. That's completely fine. We will see that if the market is again continuing back in the direction of the trend here from this support level. If we look at the 1 hour price action, created so you might see the rejection here in that market. So if you look at the 4 hour from this support 4176, the market returned back again from this low, which is incredibly exactly from 4176 level. Now from this support level, the market returned back again from that zone. So if you look at from this area, that the price action showing up with a series of higher low has broken above, that's showing the market to continue to trend back above. So as with a double bottom here, the market has broken back to the upside. Lower time frame price action again started to trend back in the major direction. So it started to trend again in the major direction, but at the same time we have the sessions high here and also the sessions low, where from this support, looking at that market to continue to rise back. So looking at, if you look at from here, creating series of higher low, and the 5 minute candle close with a big bullish rejection to the upside here. We are looking to see the market to, this is a big bullish move followed by this pullback, and the market is maintaining that market structure potentially to remain upside. You can see this is a 10 and 20 MA crossed over again, and when the market needs more liquidity, you see the price act in that way where the price action showing up to be potentially bullish here. So you can see from here, maintaining series of higher low, has got rejection back above and could continue to rise, or we could see that another retest. 30 minutes price action showing up to be bullish. So the possibility now the market to test the daily high is higher. So if we look at the 4 hour, this is the current session's high. Are you going to enter again, looking for further entry? Okay, so from here that you can see with this test, the market returned back up and the candles are bigger. If you look at the bigger bullish candlestick pattern formation here in that market, so which is series of higher low and created significant movement back above here in that market. We are looking at lower time frame. So as the market established trend again back to the upside here, we will be looking for another pullback. Okay, so this is the lower time frame structure that you can see. Lower time frame structure that you can see created in that area. Okay, so it's in a very narrow range. If you look at here, you can see creating series of lower high and also creating series of higher low, which is a narrow triangular pattern. So from that triangle, the market needs to break out. So we see that it's didn't break out. As the market didn't break out here. Okay, so if you look at here, it's a triangle. It needs to break from that triangle. Until we see the breakout, we will looking to watch the price action. Once the market managed to break out from the triangle, that is where a bigger move potentially to come here. And the long-term trend is bullish, so we our eye here for potentially upside move in that market. Welcome. I'm looking at for this market to break out 4-hour chart that you can see it has created this doji on both direction, and the current session's low that you can see here, and from that current session's low, as this is a bull market, could be another possibility coming for us to enter. As tomorrow coming up another important day, so today the market could bring enough volume here in that area. If you look at the calendar, all those news just moving back to the next week due to the shutdown. that is bringing low volume in the market, and sometimes we see the sideways movement, and that is part of that movement. Breakout is important now. Getting the rejection from the higher price here, and narrow range here again to see that the market to move in a sideways. With a long wick candle, there's a doji on the 30 minutes chart. There's a semicircular structure here. If you look at semicircular structure, and the possibility to here, if you look at this semicircle, unless you see that break of the structure, the lower time frame price action, if you look at here, after the retest, trying to bounce off that level, and this is the 30 minutes and the 1 hour price action that you can see pretty long wick doji from the 15 minutes and the 5-minute chart here that you can see lower time frame. If this market breaking that support, still there is a possibility for bearish move again, because it already started its move in the past. But at the same time, lower time frame, if you look at this 30 minutes candle, which is doji, and that candle still could try to bounce back up. So until you see that the directional confirmation, we are still holding for that move any direction here. when the market has potentially less volume, we see that less predictable the market is. So and when the market is less predictable, we will be waiting to see that to break out. Now you see that this is a consolidation here in that area, and after this big trend, there was a big trend here, right? Complete upside trend, breakdown, consolidation. It might range little more time. There is a reason, as the data was being postponed, traders not getting enough information to move the market. We had a previous session, massive one, bounced from that level. And now this session, here we can see the market maintain series of higher low, where the price action is showing up to be now little sideways. So this is a choppy at the moment, and we can look to break from that choppy market and then to enter again as soon as the market managed to break out from the choppy. Until it breakouts, the only thing that we can do, guys, is to be patient and watch the price action. Looking for very soon another entry once the market managed to break from that choppy market structure. Until that, we are almost nearly to the end of the session, the second one. Tomorrow coming up again another session. Later in this NY session also I'll be trading, and if you trade, we'll be posting in the premium group. Until that, guys, stay well, stay happy. Thanks for joining here. Make sure you join the Telegram, also link below this video for more updated education as well as analysis that you can see every single day. That being said, thanks for joining here, and I'll see you again very soon trading live.